This is your daily market recap for Wednesday, June 8th, 2022. Let's go.
Hey everyone, this is my channel to help investors and traders develop a probability-based mindset to succeed. Also try and keep friends informed of what's going on in the markets and the economy, and also a little real estate content as well.
Hello everyone, this is Dan Max at EXPI Realty, aka the Trading Agent, and this is your daily market recap for Wednesday, June 8th, 2022. It's good to be back. Nice little vacation. Sorry if the videos were not every night. A little bit of a computer malfunction here and there on the road, but I hope everyone's doing well. Again, if you're newer to the channel, check out the Discord room. The link is in the description below. A lot of people in here talking about what's going on in the world. So let's get into it. First, starting off, again, a lot of stuff posted while out of town. A lot of good. Appreciate everybody keeping people up to date with what's going on and what they see is relevant. There's a lot of what I would say very seasoned and very helpful people that like to be involved, and I always appreciate that. And I know for me, especially when I'm not available, it's nice to be able to look in the room and say, hey, what's going on in the world? Pretty interesting post. Joyous here and I've been discussing this off and on in the room as well about how strip clubs can be a leading indicator for a recession, and this kind of picture kind of points it out. I mean, we talked about this, that again, if you're not familiar with the side rooms, there's a lot of reference articles and a lot of things about the markets that I reference in here, and one of the things that will always start a recession is inflation, because people are not adjusted to higher prices. Now, again, if they're slow 2-3%, that's not a big deal. Dramatic breakdowns usually are caused by high inflation and higher interest rates and shortage of raw materials. I mean, you literally couldn't draw this up any better. And so, how deep is this recession? How, people are like, well, how do you know we're in a recession? We've gone sideways and chopping and all this stuff. And it's like, listen, think about what's going on, where the feds are at. They have to tighten. They're stuck in a hard place. Again, it's not going to be a one-day event. I mean, think about most recessions take 2 to 3 years to play out. So we're just starting, like officially first quarter. So it's not going to be a straight line move. And let's get into the charts, because I would like to show you guys again and again and again just kind of where your head should be at as you're watching this stuff and how it all will play out. I apologize for the congestion. Some of y'all know I'm going to ENT. My nose is just never stops running anymore since my COVID vaccine. Literally sinus drip forever. So freaking annoying. Head and shoulders top. We talked about this with Bitcoin. The way that it's being pictured, and good friends of mine this weekend I spent some time with, who were Bitcoin owners and actually people who got into digital currencies in the 2012 2014 range. They did really well. And one of the things that we were talking about this week and weekend was the action, and they were all very convinced that again, green with this 30,000, 29,000 level, and if it breaks, it's going lower. And a lot of them are looking forward to buying the dip, because it seems rather obvious. Now, I know a lot of people are going to say, well, what do you mean obvious dip? Well, look at the action. You've got a level, and people who've traded Bitcoin for often, have been doing it since, again, if you want to go look at a weekly, you can see it got really parabolic. But if you look at the beginning of Bitcoin, you had big pullbacks. You get some really big pullbacks. So, the people who started, man, it's really crazy to think how this thing really started. I mean, it almost looks like a flat line when you compare it to some of the original moves. Again, a big spike. Man, that's just crazy. Big spike, sideways, and build a base. And so, if this is the head and shoulders, top of the head and shoulders, like biggest movement that it's seen in a while, well, a lot of them would not be surprised if you get what I would consider the same thing that's probably going to happen to gold. Now, again, people argue digital gold, whatever. Let's be real here. If Bitcoin is a proxy and it has a fixed amount of coins that are out there, and it becomes somewhat of a digital currency, like in a currency like gold, in that it's not paper-based, unlike gold futures, Jesus Christ. I think you can see very clearly that nothing is safe. And I've brought that topic up a million times, because people are like, this whole idea that oil is somehow safe is a farce. And again, everything is relative to the moments, the hysteria of the time. And gold and silver uranium. I mean, uranium pop, that's some good news. I mean, again, I think all these things have great long-term fundamentals. But in a recession, I mean, are we going into a depression? Ugh, that would be really painful. But liquidity has to come out of the system. You never really know. But what do you know? If you wait and you're patient, you're going to see some downside moves in action. And the action's going to be super big to the downside in certain things. And you're just going to be able to shop. And so if you liked Bitcoin up here, it's crazy how people are like, I don't know, at 30,000. Well, if it's at 5,000 or what, who knows what it gets to. I mean, if 70-80% corrections are pretty normal. So you do that from the top, I don't know, somewhere between the 10 and 15 range. I mean, you'll basically be shopping by yourself. And so let's go into, like, again, oil futures, which are the bubble. And again, I pointed this out in the weekend recap. Like, notice where oil bottomed on the weekly, right as the election. And people really must believe in Hunter Biden's investment thesis of oil and gas, because it's gone pretty well for him. Big Papa makes it rain. Now let's get into seriousness, because now, okay, get the future spike on Ukraine. We've talked about this action tightening up as it gets higher. Let's go look at the daily. Too bad I don't have the volume on here, but look what the action is. You're basically retesting the close in the lows, not the close in the lows, like the open and the close. I apologize. Let me get this real quick. Can you just give me a level? Thank you. Thank you. It wouldn't, now again, and so here's the thing, like, you're riding the upper channel bound. Everybody's calling for 125. We all not agree. Like, that's the consensus first upside target. Like, you read anything, you read any stock twits, Twitter, social media, investing, oil guru, the first stop is 125. Well, that's where they're pulling that number. It's because that's literally where the candle, like, you couldn't close above it or below it. So it's a lot of what I'd call obviousness. Well, one of the things that's, I always love to talk about obviousness, and we'll pull this up when we get to Apple. Everyone's expecting a certain price target before they want to short it or before they want to do something. When everybody's expecting the same price target, people start crossing the picket line, literally. Like, they'll be like, oh crap, if everyone's waiting for 125, I got to get out 124. And then if people start seeing the price action not get there, usually sometimes you see short arm action. When I say short arm, like, the target isn't hit. We don't know right now. And again, this is action. Is this the volume down here somehow? Anyway, it's rather difficult. And that's what I always tell people, like, picking the first top is usually not the best idea, right? Look at how many pops you had. 1, you had 2, you had 3, you had 4, 5. And this is the fiver stock. Odd numbers typically, right? On pops and drops and gaps, like law of threes and the 3-day rule and 13 candles and what's his name with all the numbers. I can't remember, but you guys know what I'm talking about. Anyway, keep in mind everyone's anticipating 125. Today's action was rather wild, and we'll get into it because I like to look at the USO for the daily action for intraday, like the market hours, like the same thing why I look at gold GLD versus gold futures. Like, I'm trading gold during those hours. I'm not staying up all night trading gold futures, but I am also paying attention to what's going on during the hours that I'm awake, because that to me is the most important thing. All right, TLT. We have talked about this, and here's a reference of the first bottom is a trade, typically. Is it a V? No. Sorry about that. What do we say? We played this little up. We said watch for the 114 to 112 range. Notice where we're bottoming. 113s. Now again, if you were confident that the peak of inflation is behind us, meaning that oil cannot sustain the upward trajectory, and you think actual inflation will, on a relative short-term, month-over-month basis, will be coming down, then of course, and the Feds keep in mind, the Feds do not want higher interest rates on their government debt. They can't afford a huge fiscal deficit. Like, that has to always be in the back of your mind of, like, why the TLT has always been, and why rates are manipulated to stay low. Like, they literally can't afford higher rates. It's the same thing why, like, the ECB bought endless amounts of Greek, Italy, Portuguese debt. Like they can't, like those countries literally are fiscally default instantaneously with higher interest rates. Well, the U.S. is in that same trap. It all will end badly. I don't think we're not going to like argue that it will not. But the Feds have some tricks up their sleeve still. It's still like, think of this as a 9-inning baseball game. We're probably into like the 7th inning stretch where the game could be over, but the Fed's not done. And that's what I think of in this cycle, because it will end badly, but it doesn't necessarily mean that rates cannot go lower in the near term. And that to me what seems, again, like the contrarian trade. Well, everyone's talked about 3-year on the 3.0% on the 10-year. Where are we at on the TLT? We're right back near the lows. Remember we talked about, again, V-bottoms are really hard. You kind of have to anticipate them. And again, that's why people are like, why are you in oil shorting? I'm like, it peaked and it's chopped out for a while. It seems very logical. It's a trade. And so maybe oil does this where it pops up before it fails. I don't know that. But it could have also been like this and then it... Anyway, we'll get into that later. The dollar. Oh, okay. Bottom line on TLT, watch the range. Watch the 112 to 114 range. Because if it holds, rates will go lower. I think the market will like that. But it will also show you something within the commodity complex. So I think the commodities will sell off if the rates go lower. It'll be like a trigger for one to the other. Because I don't think you're going to see higher commodity prices if the bond market's being bought. Because that usually means, think about how liquid the bond market is. It's hundreds of trillions of dollars. Is it hundreds? I don't know. Whatever. A lot of money. It'll flow from one, it'll ebb and flow, and that's where it'll probably find its safety. It'll get out of commodities as a risky asset because the consumer is weakening, yada, yada, yada. Gets pretty complicated. Again, I don't like to be a macro thesis kind of guy because, again, you and I can have a discussion and we can be wrong. Like we're not the Feds. We don't pull the strings. We're just kind of anticipating what they can be doing and laying out the probabilities. Dollar. Talked about this a bazillion times. Blew out, pulled back to this channel, which that seemed pretty safe. Again, on the monthly, I think we're going to go much higher. And people don't understand the dollar milkshake theory and the process of how when debt is destroyed, it requires and asks for dollar denomination to cash in that debt. How that ultimately plays out. Now, again, that's just a theory. I still think overall, compared to say like maybe the ruble, which has acted really strong, obviously because they're commodity based, I still think the U.S.'s military provides us a sense of comfort in investing in the dollar because we're also more of a free market capitalist country. Not as much as what used to be, but still better than other said countries that would probably be listening to this recording. Wouldn't like to hear that. You know who you are, China. Just kidding. South Korea or North Korea. The VIX. So again, dollar, I think it's going to go higher. Oh, crap. I apologize. All right, the VIX. What have we said about the action post top May capitulation near term? We've said chop in the mid-20s. Now you're really getting down to some extreme levels to me, which I think... Jesus, come on. When I say Jesus, I mean it in a good way. Like, answer my prayer. Hey, Kat, hold the 20s, mid-20s. Now, 23, would you consider that a mid-20? I don't know. You're going into the FOMC next week. You have options expiration, and it's a special quad witching end of quarter. OPEX. Man, the year is going by so damn quick. And also you have CPI on Friday. A lot of stuff going down, compressing the VIX, even though the action doesn't look that strong. Again, I've warned people, if you trade the extremes and short them, I am all about it. I think you are nailing the cookies when it comes to tech and the stuff that's been beaten up really badly. Because I think that's very obvious. Like it's, again, I hate when people take this personally, but I think Apple, AMD, the whole tech sector is very .com-ish. Hates inflation. We're going to be in a long period of inflation after this, and that ultimately these stocks are going lower or nowhere. And again, you can have that argument with me, or you can watch the previous video I did in December about the tech war, who wins. And clearly it's been commodities, but keep in mind, even during a bull market, you get major corrections. And I think that's what you'll see out of this, is that the next like big washout should be a buying opportunity for what I would consider probably a relief rally in tech, probably a relief rally in gold. You'll see lower rates. I do anticipate, though, that when they try to take the rates lower and there is like a lower ultimately inflation, I really think they're going to try to push oil down. Now, I know that's not what everyone thinks, because everybody thinks the Green New Deal is like what they're trying to push and that they're going to be able to get that done and try to push the narrative. I think that narrative is a monster losing narrative in front of a midterm election. Like, again, if politics aside, whether you agree with it or not, pushing that narrative to a country that is about 65% against it aggressively after oil prices are already rising, and saying like, hey, you're paying extra, hey, you're paying $5 gasoline, well, why don't you just buy an electric car? Like, that seems very insensitive to people who can't afford that. And so what I'm anticipating is here, we're in like this phase of the consolidation. Again, keep in mind, they didn't have, the VIX wasn't effective as much as, say, the VIX, which is the VIXN, which is the NASDAQ VIX in the 2000s. People to try to argue like, okay, even then we got up to 48. That's why I keep saying like this upper 40s level at some point. Here's a 43, and we'll see what happens. Again, keep in mind the VIX, the S&P didn't drop as much as the QQQ. The QQQ was a newer product in the 2000s. So again, bottom line, where we're at, I think you can short extremes. There's names that we pulled out exact levels that worked pretty good to short and are close, and are totally wrong when it comes to oil, because we're early, because I think with the straight line move, as you guys will know, proceeds the flop. Anyway, we'll get into that strategy shortly. Look at this chop. And I literally said this last, I don't know, man, it sounds like, wow, almost a month ago now, from the mid-May. Don't be surprised if it pops. Now everyone's saying 440 and channel high. I was like, I think you get some back, but then you go nowhere. Like, and I said this looked like something like this, or it looks like something like this, or it could look like something where it just compresses the VIX. The bears get screwed because they're going all in buying puts, and their puts are getting murdered. And then people are buying calls going, oh, the bull market's on. And it's like, both of you guys parties lose. So, but if you trade the extremes, you're liking the action. So what's next? Again, told you, fellas and friends, and feminine friends as well. Let's keep that in mind. A lot of great women traders, by the way. 20-month. I don't think we're getting back above it, because again, smooth channel, ascension of death. Like, this is the final up move. Again, if you flip this chart upside down, it's like the bottom is a straight line move. Now, again, it's kind of crazy to think the S&P 500, 160 the SPY, 1600 down to 666. If people don't remember that was the actual low. We ran up to the 4,800. Now people say, oh, the monetary supply expanded, yada yada. Agreed. But just because you pump more money in, what happens when you pump it out? Pew, the opposite direction. So again, I think we're in a bear market. It's starting. It's not going to play out in a day, not in a month. Just please be very cautious of this, Anyway, QQQ, same thing. Get over this like range. Instead, watch this mid 315 level. I mean, we're just stuck. And again, if you look at the monthly, this is absolutely smooth, this bull market. Then you start getting a little crazier and you get a pullback. Then you get a little crazier, you get a pullback. Now you've gone ape crap. Like, diamond hand, like, and this is where I think I struggled last year, because I thought it was only imminent immediately that the mindset of retail was diamond hands can't lose, stocks only go up. Like, that's the top, but you don't know when it's the top, right? Like, that was ultimately something that was very obvious to me. It just ended up being later in the year when you saw the long wick, the doji, and then boom. Are we getting back above the 20-month? No. The bull market's over, y'all. And again, unless you get like hyperinflation, Venezuela, like dollar explosion, maybe, but let's not bet on that, because the end of the U.S. is not a fundamental thesis to bet on successfully, because a lot of people have tried to do that, and we end up somehow, maybe it's we have great relationships with the aliens. I don't know. We seem to come through. Supposedly George Washington talked to aliens before he crossed the river. Someone told me something crazy about that. Again, I love talking to people who not necessarily know truths, but they have different opinions. I'm like, that's an interesting thought process. Can't remember the story. Maybe someone will hit me up in Discord and make me laugh about it. Anyway, IWM, we said like this 188, maybe even up to the 50-day. Well, look at that. We're just like compressing under the 50-day. Now what? I mean, we talked about this. Now, again, I hope people appreciate and listen to this. And remember, we talked about holding the 2018 into 2020 highs. Again, here you go. Smooth channel, blowout, fail. Takes months sometimes. But where are we at? Doji, indecision, due for a bounce. How high? I don't think, again, small caps, they're the highest leverage. I don't think they got much up. That's just my opinion. I'll stick to it. Again, where do you want to short from? Pick your references, use levels, support equals resistance. This area, if it somehow got up near 200, that would be the obvious easy short. We're not there, so you can't assume that. So, but you can start layering in and stop out if needed. Just really is what it is. The GLD. Man, so many people are like, you missed the gold bottom. Buddy, pal, homie, hombre. I did not miss the bottom. I am the gold whisperer, and not even a gold whisperer. I've just studied history. A lot of people know this. Retest. Retest. Another retest. Oh, gold bottomed on one bottom. Come to the Discord room and embarrass yourself and argue with me how gold is just such a smooth, easy sailing, everybody lollipops and rainbows at the bottom. No. Look what it's done. It bounced. We talked about it. We're like, it could hold backside of these channels, or it could come back down to here, because this is where I actually would be very interested in. It didn't. But keep in mind, it went from 186 down to 168. Okay, it pops $40, $50, $60 an ounce. That's not necessarily bullish, folks. Like, look at this action. And then what have I said? The seasonality of May and June, the second quarter, once it's done, and again, that was like a late runner. So what if this is just that same kind of action? Because that was actually an anomaly year. And again, I love pointing this out. People don't realize. Sorry. You had this, I guess that was technically second quarter. But again, keep in mind, this is like COVID. That was the COVID smack. This is what you want to see, is the puke, then the rally. And so I don't really consider that the same kind of process. But here's a year. Again, April through June, nothing. You run up from December lows. Look what happens in April. Gone. Total smash factor. All right. You run up from the end of December. You get into April and May, June, goes nowhere. Retest. Do I need to keep doing this? I mean, I can. Runs up from December. Goes sideways for June, April, May. Oh, look at this nice April, May, June. Fail. Again, second quarter seasonality of gold, just go look it up, Google it, whatever you need, is not traditionally good. So where does that put us at now? Because again, I really want to get deep in this, because it's been about a week since I've done a really thorough one. Where we at is just a dead cat bounce, in my opinion. Well, Dan, what if you're wrong? Then wait for the highs to take out, because if this thing's going to 2,500 or 3,000 like everybody's predicting, then the liftoff point is literally the blowout bottom or the takeout of the highs. Because if not, gold is such a pain in the ass. It'll do a whole lot of this, and you're just going to sit there and go, oh, I got to buy more calls and buy more calls and get more long. And you could have traded so much other action and made 10 times the amount. Though even though you will be right in that gold and silver play if you wait long enough, but it's like the opportunity cost. Same thing with silver. We said, watch the action. It got up to 618 and it gapped down. We're like, oh, crap, professional gap. Free fall, went below the no-brainer buy zone, and popped. Now, could this be the washout bottom, Dan? Now, again, do the math here and the seasonality, run the back test, all of this. What do you think? If silver always gets slapped in bear markets, or major, what I would consider VIX spikes, market smashes, you're like, here, COVID goes from 17 down to 10, and then rallies huge. 20 down to 8. You see what I'm saying? Like, you're going to see big corrections. Here's the correction. Could you have bought this low? Absolutely. Again, what's your time frame? I don't know, but I'm not holding this thing if the market's going lower. I want to short stocks, because this thing's going to go nowhere. Because what do we know? The best time to buy it, if the market is correcting, is when the shit blows out. So that's why I draw this circle. I'm looking at the 16 ranked dollar, I hate the SLV, but it's the best reference for me on my Q chart, or E-signal. God, if you know Q charts. So GDX. So what is that? So again, if you know that thesis, what does that tell you about the miners and metals? Leave them alone. GDX. Look at that. It held our buy zone. Bounced up to the 200-day. Talked about that last week. 20-day. Going nowhere. Maybe it does pop. I don't know. But is it really worth it? Is there other things to play? GDXJ got below, bounced up. Cool. Leave it alone. AG, you're welcome if you've been following this channel, because something that we bought ran up huge, and we said, you got to go. It can't get over this. Bam. I mean, it dropped in half. Now, again, could you buy it down here at 7 and hold it for the long term? I would not say that's a problem to me. I just don't know if you want to tie your capital up into something that might not go anywhere, because it could pull this kind of crap and then one last, then go. AEM, love it. Love it. Where? Not here. No. No, don't. I'm telling you, you can use your capital in better, efficient ways. NFGC, love this company. Man, if it gets back down to 5s, I'll start buying it. Even better if it gets down into 3 or 4. Because again, if the market blows out, nothing is safe. Just never forget that. Study the past. The only thing safe is cash, because people start getting margin called. Everything gets liquidated. It doesn't matter. Even the best stuff. You know, you heard the expression, throw the baby out with the bathwater. That's what happens in the market. Like, there's some great babies, like gold and silver or Bitcoin or whatever your baby is at the time, and you know it's strong long term. They'll throw it out. PAAS, same thing. Wait for the 20s. Letter X. Man, I have heard so many times from random people, hey, you were really good at picking the bottom at the 20-month area. You know, again, 18, 19, 20. You didn't have to be perfect. Getting out here at the 200-month. Let me zoom in if you're just new to the channel. Now what? Oh, you're at the 20-month? Yeah, but guess what? The same rules apply to gold, silver as they would letter X. Because if there is a recession, do you think U.S. Steel is going to be like booming? No, they might be able to raise prices and create like a nice floor, but I can't buy it because look, it goes from 23 and someone's like, oh, you're just dead wrong. It gets a 200 day. I'm like, watch up here, pulls back. It's just dead money. And if you don't understand the concept of dead money, you haven't traded long enough, because there's times where you're literally in the wrong trade and you just sit there and everything else is moving and you're just like, oh, that's great. You know, you're like the tortoise or the hare, but you're like investing in tortoises. And it's like, oh, you might win in the end, but it might be 8 years. Like, no, you want to trade some hares and like bet on them and then sell them if needed. VALE, we talked about this. Like, I love this. I think they're relatively cheap. They've got a ton of commodity exposure, but I'm starting to hear rumors of things like commodities, materials like ports being overrun with excess inventory because no one's building. The economy literally hit the crapper. Now again, everyone goes, oh, China shut down and the reopening. That's a whole nother topic in itself. But I mean, high gasoline is prohibitive to economic expansion. I mean, it's the same reason why inflation always causes a recession, because the consumer cannot afford to pay higher prices. And so demand drops in everything. So VALE, here you go. Nice little pop. Engulfing down, going lower. I mean, it just seems obvious. CCJ, now here we go. Let's talk about uranium, because I know the uranium bulls who listen here are just like, we can never lose. And again, we told them literally up here in the low 30s, please respect the volume at price zones. Please respect the Fibonacci's. Look at this area. It was so technically sound. Backed off. Now what? Talked about you could buy down here. Again, did I want to? Did I? No. Again, if you think you're going to nail every trade, like, pretend you're Jim Cramer, because that's what you're going to become. You're going to lose more than you win. You can only focus on so many things. Talked about this could bounce. Nice news on the FDA. Not the FDA. The federal government wants to buy $4.5 billion worth of uranium reserves. That's okay. Keep that in the back of your mind. So if things do pull back, look at this action. 3-day rule is in effect. Good news, 3 days. This is cool candle. Like, this is bullish, high volume. This today is bullshit. Because again, if you are bullish and you're coming off a base, let me talk like Captain Kirk, and you're coming off a base, you do not want to see day 2 a doji, because the doji is into session. Think about it. If the news is so good and it's printed the second day and somebody has a stopping power, red flag. Again, does this ultimately end up being like a head and shoulders complex? I mean, again, I like uranium. Like, don't get me wrong. Like, I'm not some asshole, but I've got friends who were like started buying, and again, I know there's a lot of you guys, Twitter guys out there, because I know you guys were buying this stuff in 2015, 2016, or like diamond hands, diamond broke. Now you're in an uptrend, which again, confirmed clearly. Congrats, nice work. But where's my volume on that chart? There it is. Now what? Well, again, if the same principles hold to the baby in the bathwater, why would you, again, you can trade these names, trade extremes. We've talked about that. If that's what you feel you need to do, great. Do not marry anything in this market. Look what zones you're getting back into. And so when I hear next week, hey, you freaking idiot, you told us to sell in 28s, and it gets there, if it gets up there, and then it fails, crickets. No one's going to be like, hey, you warned me. Like, this could be the head and shoulders top. Sorry to rant on some of these, but hey, man, like, this is stuff we need to go over, because I think a lot of people, again, are looking at commodity complex. Here again, copper name, nice bounce, boom, smashing, failing. Hello, nobody is safe. I hate to say it. I like Mosaic. I like CF. I like agricultural, anything related to agriculture, because again, food supply, inflation. Look at these names. Peaked 80s down to 50. What demand's incredible for potash and for nitrogen and for fertilizer and growing, and farmers need to grow. Look at these names. CF making lower lows. Hey Dan, oil's gonna be immune. Really? Well, look at all of your other favorite names in the commodity sector. How immune have they been? Don't lie to yourself and tell you that. And again, because study the past, because we're going to get into an oil. I'm going to go through it thoroughly one more time so people understand like why I might be early and wrong, but I'm not like just completely capitulating, giving up on the trade. Let's get into tech. What did we say last week? Watch, like I said, 106 to 107, but then watch the fib. Look at that. Fibonacci's playing out perfectly. You shorted up here. Nice work. We said 110 would be probably your stop. You could layer in from 106 to 110. Awesome sauce. Because again, what do you see on the big chart? This is the crazy uptrend, head and shoulders top peak. I've told people this a million times. When tech peaks, it becomes a commodity. There's all great sorts of products. AMD will have great chips, but so will everyone else. And then it becomes a commodity, and then what was the difference here? Just a bigger. That's all it is, and people won't believe it until, you know, they'll be broke afterwards, and they'll be like, you were right, help me from now on, and it'll be like, no, you could even help yourself during the actual moments that you should have. What do we talk about? Apple, the 150 range. Congratulations if you got up there on those peaks last week. Nice lower high. Again, maybe even gets back up there. This is the area you want to short. Volume at price node, resistance, trapped. Everybody up here. Let me point out who's trapped. I was getting aggressive. Everybody up there. They're all trapped. So every pop, of course, they're getting sold. Now the volume's dying. Not surprised. Like you had to think of like the rubber band man theory in reverse. Like you sell too fast, you got to reload to go running again. Pretty simple. Roadblocks. Now here's another one. Now again, people are like, they always focus on oil and they're like, you're such an idiot. I'm like, all right, and I hope they watch some of the other stuff. Roadblocks. We said, hey, this name with volume after earnings, do not be surprised if it's popped. Because guess what? It's down from 140. Gets down to 22. Of course it pops 50%. Nice trade if you took it. Now what? We said hold over the 20-day. I mean, it's really that simple. I think they do get bought out because someone like Microsoft or Apple, who do have cash, need to deploy it into something that has a residual future benefit other than buying their stupid stock back, because that'll look like the dumbest shit they ever did 5 years from now. That's my guess. Reduce the flow, but doesn't reduce the people who are going to be selling it, because it is inflation, and inflation does not be friendly to tech stocks. Tesla. Basically you're just saying the same thing over, y'all. Talked about getting up here to this like high sevens, low eights. I mean, you can see it's the resistance right here. If you need it, I'll draw it a little cleaner. It played out right where that fib lines up, actually, which is kind of cool. Like, you love when they do that, because sometimes they can be that clean. You can see the zone matters. We hit it, bounced off. Now again, what happens? Kathy Wood's coming on CNBC saying bye. To me, that's bye. Like, no, leave it alone, man. UTHR, again, here's another name. Like, warned you, told you. Like I said, watch the earnings. Okay, now you had the retest and you had the volume. I was like, this company's clearly going to have something good going on in its pipeline or going to get bought out. Took a while and it was acting strong. As remember, think of like the market's going this way and this thing is going slightly up. News comes out, and boom, trade's over. Now again, could it go higher? I've told this to many people who own it. For this big, that's a pretty solid move. Let's be honest, 160, 170 up to 230, 230 almost, yeah, 230s. I would be taking leverage off. Now, when I say the more you're up, the less you own, that's, you never know. Like, does it get up to the channel high 250 area? Maybe, but if it doesn't and you didn't take any profit and it fails and the market smashes, you're going to be real pissed. Okay, fundamentals. EXPI, company I work for in real estate, doing great. Amazingly doing well. Fundamentals fundamentally don't matter. Look at the stock. Went from, I think we got up to 9. What was it? Should know this by now. 89, or no, 90.14. We are at $14, friends. Pretend this is Apple doing great. Amazon doing great. But the momentum comes out. It doesn't matter. Momentum comes out of tech. You do not want to be involved. All right, oil. Let's get into it. Now, this has been incredibly frustrating. On a scale of 1 to 10, probably 11 for me, because typically what you see, and again, keep in mind the futures versus USO, we know. This day is clearly the volume capitulation day, right? Like the market makers who bought endless USO when oil futures went negative, as you can see down here, endless inventory, have been distributing along the way, right? The Ukraine war was a great opportunity to distribute into liquidity. Think of Livermore example. Well, now what's happening, which was rather interesting, because again, I talked about this last week. Look at this, like, new month money came in. Once there was liquidity, sold. Now what? Now we're running up. And here's what is rather ironic, yet scary, yet hard to predict. Look at the news flow. It's literally gone from oil is guaranteed to go to 150. Now you're seeing 230. Now you're seeing 250. Now you're seeing 300. Now you're seeing this UAE representative says this. You're seeing all the classic Livermore operator maneuvers to get people to buy in after the move has already happened. That's just silly. Again, if it doesn't correct in the next couple days, I mean, you just have to go. You can only, again, you know your uncle tolerance. I mean, I'm there. I'm literally like 1 foot on the door. Like, pretend this is like Hell's Kitchen, and you know, at the end of the show, they announce who the winner is, and they both have their hands on the door. My hand's on the door, ready to leave this trade and watch it and come back if needed, based on the action, because it's clearly not right. But what do we know? We know it all ends the same. Well, let's get into our little friend natural gas, because we talked about him peaking. Look at this action today. If you had what, like a 30% range today, 20% range in natural gas, peak, popped, slam. Okay. Now again, all right, think about natural gas in the market, and again, nothing's safe. Let's get into XOP, because again, here you go. Stupid, nice run, stupid run, straight line move. Uh-oh. People are like, what do you think the pullback is? Again, I see these candles and they're anomalies. They don't necessarily mean the bottom, just like you see them are at the top, and bottoms. The market maker is unloading here, but it doesn't mean, again, it compresses the action. He realizes there's still enough news to push out to the masses to continue to buy, and it runs it up. Well, then look at today's action. You open high, you close at the low. Even though it's an inside day, need more information. That's all it is. But I always remind people, like, think about, again, where you've come from. Like, literally. Reverse split, because this thing's a piece of crap. 20s up to 160s. You had big moves. Like, again, keep it post 2009. Nice move. Again, you went from 99 up to 260. Keep in mind, percentage-wise, reverse split. We've done multiple times that. And you got a big pullback. Big run up in 2008. Big pullback. This, to me, is pretty big. Again, because you do the percentage-wise. Like, 20 to 160 is a 800% move. Oh, and then you zoom on the daily. But like kind of jokingly. Here's the day of distribution in mind, like the first liquidity in March. Like, clearly we're selling. Keep that in mind. Here's the first red flag for XOP. Why Dan is shorting, trying to short anywhere here, feeling like it's a win. Distributing here, right? Gets marked up even higher. Look at the volume dying. And then when you do see down days, it has more volume than the up days. I mean, you can throw this candle and cover up 3 of these up days. We'll see what happens. Now, again, so here, talk about anomalies, volume, price, action. This candle is this size or that volume. The same candle size, approximately a third of the volume, up. That is stretching action, markup action, whatever you want to call it. Not conviction. That's you and I being the market maker, having tons of inventory to sell, and we're like, hey, those idiots are still buying. What do you want to do? Raise the price then. Yeah, great. You know, we're sitting here with 1,000 bricks and people are still crazy about brick prices. Well, then we keep raising the price on them and see if they'll keep willing to pay it, and they are. At some point, you will hit an equilibrium where we just go, hey, we see that there's like drying up and we have to sell as many as we can now, or we're going to get stuck holding the bag. There becomes that like cost benefit analysis, however you want to call it. ExxonMobil, again, brutal shorting 94, 95 range. Why would you put yourself in such a position? Well, because it was the old volume at price zone, right? After a monster rise up. Okay, yeah, got it. Dude, you're wrong. Yeah, I got it. Again, here's your anomaly. Well, CNBC literally is doing the future of ExxonMobil as a company on CNBC on Wednesday. I hear that announcement, I'm like, what's oil and gas going to do now? How much further? This is not smart money. And I apologize if that's you buying up here. You are not smart, because typically when it does this, it goes boom. After this big run up, again, think about it, came off of a longer base, a flatness, 50s. You were now stretching the valuation to the point where, again, you were literally at the all-time highs in ExxonMobil. Do you not think there's people from the past? Because, again, the share count is obviously increased, hence the volume increases as well. Do you not think, and they probably did some buybacks in these years, that people with memories are not looking to sell this? Now, again, I could be wrong, and this thing could, maybe I'm ultimately dead wrong. This thing goes to 150, the stock market goes to 150, oil goes to 150. They run this up like Tesla, and it becomes the new Tesla, and it trades at a $3 trillion market cap. I have no freaking clue. But this action feels very toppish to me in the sense of red flag, anomaly, another long wick. We'll see what happens. And then the CNBC special. The CNBC special is like, we've all talked about this. When the CNBC does, markets in turmoil specials, it's usually at a bottom. Well, what is the market in perfection reverse of that? Is that somehow just immune, not bullish? No. Because I don't even want to get into it. Anyway. Keep that in mind. XLE, SJ was talking about this one getting up into 100 range. Look at today's action again. Red flag, doji. How much higher can this go? I guess it could go back to the 2014 highs. I got up in the 105. What was the high in the 08? Again, we're back at the 08 levels of $150 oil. This action is not sustainable. Even again, say you're wrong. Say we're wrong. Keep in mind, 2001, the XLE went from 34 down to 20. Nothing is safe. You still can't tell me that this straight line move action with this kind of exuberance is bullish consistently and sustainable. Maybe it only pulls back some, but again, there will be a trade, and that's where, again, we can talk about. If you don't want to stay short these things, because that's what I think is a good short, go to tech. Pick other names. Just remember, nothing is going to be safe. Like, just don't play this game of, like, what you would consider, like, never-ending strength. Valero, we'll end these again. These names are absolutely trading at, like, tech PEs now. They have to execute this in near term. And again, it wouldn't be surprised, again, 82 and a 64, a 20, 25, 30% correction. This is like the blow-off. And look at today's action, Doji and high volume. Chevron. Good old Chevron. All these gas station companies are acting, again, like tech companies, and it's so funny. Doji. Red flag. Look above and fail. Doji, potentially. Again, since March, this company's gone nowhere. Let's go look at the monthly. Oh, what that, dude, come on. Come on. I mean, Ascension, 31, 104. 50, 180. 400% move in a Chevron name is not going to continue higher. I hope this video has been helpful. Again, I apologize for not being able to get as much content out there when I was on the road. But, HYG, corporate debt. Talked about this. Corporate debt is trash in higher interest rate markets, because if companies are borrowing money and have been borrowing money cheaply to expand and buy buybacks, and all of a sudden the economy hits the crap, corporate debt is sold because it is so risky. High yield, corporate high yield means, if you think about it, high yield means crap, because yes, you have to pay a high yield. danger. Again, there's so many red flags about this market that, again, I think a lot of people, they say you can't see the forest through the trees or whatever that stupid analogy is. Like, yeah, from on the minute-to-minute, day-to-day stuff, it's really hard to see what's going on. But we talked about the markets have hit some areas that are getting tired. The HYG pulling back, the TLT retesting the lows, the dollar basing before it could go higher, the SPY getting stuck at range, the VIX getting caught in the like 20s. Something's coming. I don't know when. Is it based on the FOMC? Is it based on ABCDYG? I don't know. You just know it. And so you position accordingly, and you have to be patient. That's what swing trading is. If you want to day trade it, trade the extremes. Just be safe. Love you guys.
Hey, thanks for watching. If you have any questions, stop by the Discord room. A link is in the description below. Also, if you'd like to help support more free content, the PayPal link is in the description as well. I appreciate your continued support of the channel.